Wow, the market was red. Hey, what's going on everybody? This is Gary, and in this video we are going to talk about Clover, ticker symbol CLOV, and in particular we're going to talk about the chart data as well as my personal opinion and the buzz around the 99.24% short interest. So let's go. The market is red, be it S&P 500, Nasdaq or DJI, red across the board. So inevitable, Clover Health Investment Corp, CLOV, was down negative 4.14%. We closed at $12.04. Is it surprising? Is it surprising? Well, with so much FUD going around, fear, uncertainty, and doubt, inflation, fear, we know that market makers are going to push the price down, and we know that the chart will need to fill in the gap, the $12 gap we discussed in the previous video. So we are ready. We are ready. And I said that if it drops to $12, I'm gonna buy. All right, which I did. I bought more, and we closed above $12. I think that we need to celebrate, because you see, $13 being the maximum pain, right? The maximum pain. $12 is still pain, right? Imagine I tell you, if you punch my eye, will cause the most damage, right? My eye, but you miss my eye, you suck. You miss my eye, you punch my nose. It's still painful, okay? It's still painful. Doesn't mean that you punch my nose is not painful. So my point is, 13 being the maximum pain, it's okay. We miss it because we don't look at it, oh, $13, Monday is gonna fly. No, right? We know that this is a battle, right? We stay on course. We look at the data. We look at the chart. We know that it is imminent. So we stay on course. Now, let's take a look at the chart. Okay, this is the 4-hour chart over here, as you can see. We mentioned that we need to fill the gap. Okay, I mentioned in the previous video, I mentioned in previous video and stuff like that. We need to fill the gap, and we filled, and a lot of traders, a lot of investors are very bullish. A lot of them are, looking into entering into a position at this price point. Remember, I said I'm gonna buy here. I know that it's going to drop here. It's okay. I'm going to buy more. So this is the chart, 4-hour chart. So let's take a look at the RSI as well as the MACD. So if you look at the RSI, you see it is at a normal range, average range. And you take a look at the MACD. Yes, a lot of red candles, right? The volume has decreased, a lot of red candles. But if you take a look at this, the purple line is about to cross the, if we have a green day, subsequent green day on Monday, Tuesday, and Wednesday, it might cross and we have another bull run. And I would like to highlight over here, as you can see, this is a 50-day moving average, this green color line. It has crossed, all right? I repeat, it has crossed the 200-day moving average. So let me recap. The gap has been filled, and we are seeing this thing called golden cross, where 50-day moving average crosses 200-day moving average, which we can see over here is more clearly. So 50-day moving average crosses 200-day moving average. So it is a bullish run. Now, what is the entry level? What's the risk to reward ratio? What is the support or resistance level? My personal opinion is the entry level, well, personally, I enter at 12-ish, all right, 12.10. 12.03, 12.04, 12, 11.98. It is a good entry level. Let me share with you why. Okay, the risk to reward ratio is you down 20% or you go up more than 100%. Now $12, it could go to $24, it could go to $28, it could go to $50, $60. The thing is, the reward is there. The risk is negative 20%, and the support and resistance level is either $12, which is here because we filled the gap. This is 1-hour chart, by the way, and or 11.55, or then the resistance is $13.50, which is around this area. Okay, we tried to break several times. So that is the support and resistance level. So why do I say this particular line? So as you can see over here, right now it is $12. We are back at the 4-hour chart. So as you can see over here, we touched this line, $12. This $12, the previous time there was a bounce. I mean, granted, it has dropped to 11.55. That's why I said this is another support line. It went up to $11.50, thereabout. right? So that's why I say that is another resistance line. So if you want to, if you don't look at the data, if you don't look at what's going on to Clover, you can day trade it if you want. Your entry level $12, then maybe profit at $13.50. But I implore you, if you don't know what is Clover, you don't know the data, I implore you to take a look at it. You can take a look at my videos, you can take a look at other YouTubers. I implore you to, because I mean, I do see the potential of the short squeeze, so you just take a look at it, right? So the next support line is 1057 over here, okay, which is around here. Okay, so notice I always say it is approximately around, because the resistance and support, contrary to a lot of people who say, I don't think that it is a fixed hard and fast rule that it is that particular point. No, it a range, because sometimes they might have a fake breakout, the resistance line, a fake breakout, and then it dropped back down. Just like you take a look at this, there was a fake breakout and then it dropped back down. So it is a range. So enter with with risk. Need to do your own risk management. But why I say I don't think so, I don't think it will drop to 6, 5, 4, whatever, this place, right, 7. I don't think so, because Clover is a different animal already. My very first Clover video, if you guys watch, is at 9,000 members on Reddit, and now it is at 28,000 members on Reddit. In what, 1 week, we have grown 2x. Yeah, 2x, 3x. It's a completely different animal. We were on the limelight, on the same stage as AMC. So let me let me share with you this, okay, data. All right, I jump a little bit. So I would like to give credit to this Reddit member, okay, this person, for posting the screenshots, which I went to verify some of them, and it's correct. So let's take a look. The short interest for OTEX, the days to cover is 1.26. On loan is 60. Oh my god, 60.46. That's a lot. And utility rate is 100%, guys. 100%. That is insane. 100%. The utilization rate is the number of shares borrowed divided by number of shares that institutional investors are willing to lend. A higher rate indicates that more of the supply of shares in the securities lending market is being borrowed. Okay, a higher rate indicate that more of the supply of shares in the securities lending market is being borrowed. A higher utilization rate also increase the likelihood that short sellers could face a buy-in if investors recall their loaned shares. That is crazy. Okay, so if you look at utilization rate alone, short squeeze is imminent. But then let's take a look at the free float on loan. Okay guys, let's take a look at Fintel result, the short squeeze score. We are ranked 15 out of 10,000 stocks. I repeat, 15 out of 10,000. If that don't sound crazy to you, I don't know what it is. The fact that utilization is 100% and we rank 15 out of 10,000 stocks, that sounds crazy, right? It shows that short squeeze potential is there in terms of the statistics. And let's take a look at the short borrow fee rate. It is now at 6.16. It's dropped slightly, so it range around 5, 6, 7, 8 now. So it is considered high. The last time we squeezed from 9 to 13 and 13 to 28, we were at 4%, and now we are at 6%. So it's a lot more. And right now, as I mentioned, Clover is a different animal already. So yeah, I just want to end off with this, right? The fact that we are pretty heavily shorted, right? With short interest as percentage of free float considered high. The fact that AMC is 13.38, GameStop is 13.42, and we are 46.93. It is insane. Okay, if you guys don't know, if you guys take a look at OTEX Twitter, honestly, they have been tweeting a lot on AMC. Okay, they have been pumping AMC. I have nothing against AMC, right? In fact, I have a stake in AMC. I bought at AMC in January, and I noticed they start to pump AMC a lot, right? So the fact that, you know, they still add CLOVER in means they know something, right? Means the data never lie. So let's take a look at the buzz around the 99.24% float. So let me give you an example. This portion over here, it is a free float. So we have 156 million float. This is class B. This is class A. Get it? This is class B. This is class A. By the way, I'm just gonna make sense for laymen, for easier for people to understand. So if you fully understood what's going on, and if I have said something that might not be right, do leave them down in the comment section, and then, you know, I'm willing to learn, right? So class A, class B. So class B, you have this company called Green Oaks. They own 96 million of class B shares with different other companies lah. So that's why blue. Okay, maybe got more. All right, so I'm just gonna, yeah, so maybe got more. So but you get my point. So the info you get here is Nasdaq total institutional shares is 156 million, which is here approximately. And you take a look at this. This is the SEC filing. Green Oaks Capital Partners LLC, 96 million shares, thereabout. 96 million shares. So the problem right now is the 156 million float counted the 96 million of Green Oaks shares. But the thing is, class A, they have class B shares. Okay, they have class B shares, 96 million. You see, 96 million class shares of class A common stock issuable upon conversion of class B. So they have class B shares, they can convert anytime they want, okay, upon conversion. So meaning it's either this one gone, then they convert to this class A shares, or they double count, which is not possible. So therefore, what needs to be done is we need to take out this 96 million shares at this class A portion, this float. But if you take out the 96 million, then you need to do the math, which I did for you. This amount, 156 million minus 96 million, you get 59 million float, float left. So significantly lower. So I'm not going to put the 50 something percent. Let's take a look at the 46.93%, okay, of free float, short interest percentage of free float. So this is the free float, right? 156 free float, which is quite high. But the fact that it's high, we are at 46.93%. So imagine if the free float is smaller, then the short interest percentage of free float would be higher. Okay, the short interest of free float would be definitely higher. So the question is, what is the SI, the short interest of percentage of free float now? Okay, you do the math. All right, you do the math. Now is 46.93, which is 156 million, but the float is smaller. So therefore, the short interest has percentage of free float definitely bigger. Simple math, right? So that is the thing, the buzz around it now. So if it is higher, all right, the short interest has percentage of free float now is significantly higher, meaning the short squeeze potential is so much higher. So yeah, I'd like to reiterate with the details, the data that we have discussed, short squeeze potential is definitely there. So that's about it. I think yeah, that's about it for my due diligence. I hope you guys like this video, and you guys do smash the like button. I do appreciate it. If not, do leave it down in the comment section. What do you think CLOVER will behave next week onwards? And do you think short squeeze is possible for CLOVER? I do want to hear your opinion and what do you think about it. If not, that's it. That's about it for this video. I hope you guys like it. I'll see you guys in the next video. Goodbye.